journey and you're theirs too. I swim with tea when they turned in. The staring out to mute and can lend a pole that some key died.
When most people think about salary planning, they focus on deciding how much salary an owner-manager should receive. But in practice, the real value of a tax professional comes after the planning is complete. Salary administration is the process of turning a compensation strategy into proper payroll compliance. It ensures that salaries are processed correctly, payroll records are maintained, deductions are calculated accurately, and all CRA requirements are met. As a tax preparer, your responsibilities extend far beyond giving advice. You must ensure that payroll accounts are properly set up, source deductions are calculated correctly, bonuses are administered properly, payroll remittances are made on time, year-end filings are completed, and payroll records remain accurate and organized. The flow shown here illustrates the journey from tax planning to salary administration, then to payroll processing, and ultimately to CRA compliance. A good compensation strategy is only successful when it is properly executed. Notice the key areas involved in payroll administration. Payroll files, T4 slips, calculations, payment deadlines, and bonus payments all play an important role. Every step must be handled correctly to avoid penalties, reassessments, and compliance issues. One of the most important concepts to understand is that payroll deductions are considered trust funds. Once income tax, CPP, or other deductions are withheld from an employee's pay, that money no longer belongs to the corporation. It belongs to the government and must be remitted according to CRA requirements. This is why payroll mistakes often attract unwanted CRA attention. Late remittances, inaccurate deductions, poor documentation, or missed filings can quickly create problems for both the client and the practitioner. The goal is simple: maintain clean payroll records, meet every deadline, document everything properly, and ensure complete compliance throughout the year. Remember, a good tax planner provides ideas. A great tax professional ensures execution, documentation, and compliance. That is where professionalism truly shows, and where you become significantly more valuable to your corporate clients. Now that we understand why salary administration is important, let's look at what salary administration actually includes. A common mistake made by new tax preparers is thinking that payroll is simply paying an employee. In reality, salary administration is an entire process made up of multiple steps, each with its own compliance requirements. The process begins with payroll account setup. Before any salary can be paid, the corporation must have a payroll account registered and understand its remittance obligations with the Canada Revenue Agency. Next comes calculating the gross salary. This is the total compensation that the employee or owner-manager is entitled to receive before any deductions are applied. Once gross salary is determined, source deductions must be calculated. This typically includes income tax, CPP contributions, and in some situations, employment insurance. These deductions must be calculated accurately because errors can create compliance issues and additional costs later. After deductions are calculated, the employee receives their net pay. This is the actual amount deposited into their bank account after all required withholdings have been removed. But the process does not end there. The amounts withheld from the employee must then be remitted to the Canada Revenue Agency by the required deadline. Missing remittance deadlines can lead to penalties, interest charges, and unnecessary CRA attention. Salary administration also includes bonus administration. Bonuses must be declared properly, documented correctly, processed through payroll, and paid within the required time limits. Proper bonus handling is a critical part of compensation planning for owner-managed corporations. At year-end, payroll filing becomes important. T4 slips and other payroll forms must be prepared accurately so that the information reported to the CRA matches the corporation's payroll records. The final step is payroll reconciliation. This involves comparing payroll records, remittances, deductions, and CRA account balances to ensure everything agrees. Reconciliation helps identify errors before they become larger problems. When you step back and look at the entire process, salary administration is really about moving from planning to execution, from execution to compliance, and from compliance to peace of mind. As tax preparers, we are responsible for more than calculations. We are managing people, numbers, deadlines, documents, and compliance requirements. Every payroll file contains employees or family members, compensation figures, remittance deadlines, supporting records, and CRA obligations. When all of these pieces are handled correctly, the result is a business that is compliant, audit-ready, organized, and free from unnecessary payroll stress. Remember, successful salary administration is built on 4 pillars: execution, documentation, meeting deadlines, and maintaining compliance. Master these 4 areas, and you will be able to administer payroll with confidence and professionalism. At this point, we have discussed why salary administration matters and the steps involved in the payroll process. Now let's focus on the compliance side of payroll administration and understand what separates an average practitioner from a true professional. The first thing every tax preparer should understand is what the Canada Revenue Agency cares about most. There are 5 key areas that receive the greatest attention. First, timely remittances. Payroll deductions must be remitted by the required deadline. Even if the calculations are correct, late remittances can result in penalties and interest. Second, accurate deductions. Income tax, CPP contributions, and any applicable employment insurance deductions must be calculated correctly. Small errors can create larger reconciliation problems later. Third, proper documentation. Every payroll transaction should be supported by records, calculations, and evidence. Good documentation protects both the client and the practitioner. Fourth, matching T4 slips. The information reported on T4 slips must agree with payroll records and remittances made throughout the year. And fifth, trust fund integrity. Payroll deductions are considered trust funds. Once withheld from an employee's pay, that money belongs to the government and must be remitted accordingly. If you master these 5 areas, payroll problems become significantly less common. Now let's look at the standard workflow followed by a professional tax preparer. The process begins with setting up the payroll account. Once the account is established, salary amounts are calculated. Required deductions are then determined, and the employee receives their net pay. The withheld deductions are remitted to the CRA. Year-end T4 slips are prepared. And finally, payroll accounts are reconciled to ensure everything balances correctly. Notice that payroll administration is not a single task. It is a complete cycle that requires consistency, accuracy, and ongoing monitoring throughout the year. The slide also highlights some of the most common mistakes made by beginners. These include paying salary without properly running payroll, missing remittance deadlines, forgetting source deductions, processing bonuses incorrectly, mixing salary and dividends without proper planning, and failing to reconcile payroll accounts. Many payroll issues do not arise because the tax rules are complicated. They arise because basic administrative procedures were not followed consistently. One warning deserves special attention. corporate directors can be held personally liable for unremitted payroll deductions. This is one of the reasons payroll compliance is taken so seriously by the CRA. Failure to remit deductions can affect not only the corporation, but also the individuals responsible for managing it. As you continue developing your skills as a tax professional, remember that successful payroll administration is built on 3 core principles: execution, documentation, and compliance. Execution ensures that payroll is processed correctly. Documentation ensures that every action can be supported and explained. Compliance ensures that CRA requirements are met and deadlines are respected. When these 3 elements work together, payroll administration becomes organized, defensible, and professional. And that is exactly what your clients expect from a trusted tax advisor.